The thing about a single family or a small multifamily long-term buy and hold, it's kind of boring. But I tell you what, boring works. Okay? Doing something boring can work, but it can be extremely beneficial and wealth building in the long run. Boring is good when you want reliable income that frees you from your job. Hi, I'm Jonna. I'm a real estate investor, entrepreneur, and mom who built long-term wealth through real estate, all while my husband and I balance full careers and family life. If you're earning a good income, saving for retirement, and doing all the right things, but still feel like your money isn't creating the freedom or security you want, and you want a great life, you're in the right place. Let's get started. Hey friends, welcome back to Real Estate Investing for Life. I'm Jonna, and I am so glad that you're here today. We are going to delve into something really important. If you are just tuning in for the first time, we are in the middle of a series, and I'll bring you up to date. Over the last 2 episodes, we've been laying the foundation for smart and sustainable investing. So in episode 39, we talked about identifying your investor type because not everyone follows the same path. And then in episode 40, last time, we delved into what it means to be an active investor and why it's not always the best starting point, especially if you are busy and you've got a career or a business. It can be very overwhelming. So today is a real big one. We are talking about the idea of what it looks like to invest for cash flow, especially if you're someone that's intrigued or working towards the FIRE movement. And if you're not familiar with the FIRE movement, it is the idea of financial independence, retire early. And if you have a moment, I have an investor quiz on my website. If you haven't taken it, you can go to jonnaweber.com/investor quiz and pop over and take a look at that. And if you have taken it and you landed in that freedom seeker category, this episode is speaking directly to you because you're a person that wants options, you want flexibility, and you want to build cash flow as soon as possible so your life can become work optional, whether that's in your 40s or 50s or earlier. And the most powerful tool to get there is cash flow focused real estate investing. So today we're going to unpack what that means, what it looks like in real life, and how we can start building income streams that support an earlier, freer retirement. If you want to retire early from real estate, the fact is that you really have to create cash flow, which can be challenging in our market. So we're going to talk about that. But here's what cash flow investing really means. Cash flow is the money left over after all the bills are paid on an investment. So it's really simple on paper. You take your gross rent, you're getting paid, you're taking away your expenses, which include all of the repairs and the utilities you pay. You even want to factor in vacancies. And then you subtract your mortgage and make sure within those expenses, you've also captured your taxes and insurance. And then you come up with your monthly cash flow. It's the money left over after all of that is accounted for. So it's the income that hits your bank account every month, whether you're working, you're traveling, or you're sleeping. And we're going to talk about this. It doesn't have to come from traditional rental properties. And why it matters so much for people aligned with the FIRE movement is that this is what allows you to retire early, okay, if you're working this through real estate. Most traditional retirement planning depends on working 40 plus years, whether it's your own business, which you are working as an employee of, or you are a W-2 employee, saving aggressively, hoping the stock market cooperates with the right timing. That's a big one. And it banks on you not touching your money until you reach traditional retirement years. But cash flow can change everything. And cash flow real estate creates income now, not decades from now. It accelerates your timeline and it helps you step into a work optional life far earlier than a 401k or an IRA ever could. So let's talk about this FIRE movement. In the FIRE world, people talk about frugality and extreme savings all the time. And I don't know about you, I definitely don't want to throw money away, but I don't pride myself on being the most frugal person in the world. And there's certain conveniences and things that I've worked really hard for that I don't want to give up. Like, I don't want to feel guilty to go out and get a Saturday morning acai bowl. That's what I do every Saturday after my workout, or I don't want to feel guilty about grabbing that latte. And I love a good massage. And most importantly, I love great experiences. And we've worked hard for that. So whether it's taking the family to a Broadway musical, whether it is traveling to Italy, I want to factor those in and I'm not sorry about it. So there's got to be a way to achieve fire that's beyond just cutting expenses. The thing that is so cool about real estate is it truly can let you build income, not just savings. Let's delve into some of the most common cash flow focused strategies. Because if your goal is cash flow, there are several strategies, and the best one depends on your lifestyle and how soon you want to be work optional. So let's look at the main ones. First, we've got long-term buy and hold rentals. Now, I know cash flow is hard to come by, and I'm in the state of Idaho where cash flow is extremely hard to come by. So traditionally, this has been the bread and butter for many people aiming for financial independence through single-family homes, duplexes, triplexes, fourplexes. They get long-term tenants and they have predictable monthly cash flow. Now, this is achievable if you pay cash for a property or if you have been fortunate enough to have a very, very low mortgage with a low interest rate on it. Definitely is achievable. But I'll tell you what, it's not always as advertised. Over the last 20 years, I've had these single family cash flowing properties, and I'll do cash flowing in air quotes because it seems like inevitably when I've built up a good, healthy reserve of cash flow that have been generated from the properties, we'll have something like an HVAC system go out or a roof that needs to be replaced or a extremely long vacancy because someone left in the middle of January. There's certain things that make it not very predictable. We can create and count on some cash flow from these resources, but not the majority of what we are building to create this fire movement. However, there are opportunities in other parts of the country with very low price points where people purchase strictly for cash flow and not so much for appreciation. So that is an option that you definitely could look into. The thing about a single family or a small multifamily long-term buy and hold, it's kind of boring. But I tell you what, boring works, okay? Or doing something boring can work. I remember years ago when I was on the Bigger Pockets podcast and the founder of Bigger Pockets did his little pre-intro before my episode started that he recorded afterwards. And I was so excited to hear the episode, of course, as you would be when you get invited to be on a national podcast. And Josh said my story was boring. And so that didn't hit the way that I thought it would hit, but it's true. It is boring. Buy and hold is boring, but it can be extremely beneficial and wealth building in the long run. Boring is good when you want reliable income that frees you from your job. And don't confuse boring from easy. Boring is not easy. And today it's definitely not easy, but it's still possible. Today's market calls for value adds in these buy and hold rentals for like co-living, different terms, different markets. And we'll get further into that in another episode. And then another way that people are building cash flow focused real estate right now is, of course, through short-term and medium-term rentals. Now, this has been having a big change throughout the nation right now, and there's certain markets that are much better for this than others. But these strategies do offer higher potential cash flow. These are otherwise known as vacation rentals. You could do medium-term rentals, which would be more like corporate rentals, traveling nurse rentals, these furnished spaces that are available for shorter than a year term. They can definitely significantly boost monthly income, but you have to remember they do require more involvement and higher management fees. And you want to take all that to account before deciding what strategy is perfect for you. They definitely can be great cash flow accelerators though. Hey friends, are you struggling to figure out what type of investing path is right for you and what fits your personality type? Fun news, I've got a quiz set up just for this purpose. Take 60 seconds and head over to jonnaweber.com/investor quiz. Fill out your profile and we'll figure out what type of investing is right for you. The next category is commercial and mixed use projects. Now, this is something I really love. I do have some triple net leases. I have experience with that. And What that means is that you are renting out a commercial enterprise, whether that is somebody has a restaurant, a strip mall, a retail store, a medical office building, all kinds of things there. But what happens is they offer longer leases, higher cash flow potential, and often better returns because a lot of times the tenant is responsible for increased property taxes as they come up, increased insurance costs, all the repairs. It's almost like the tenant owns the building, but they don't. You continue to build equity in the building and they pay down your mortgage if you have one. So really good opportunity with commercial to create that cash flow. I have one right now that does cash flow on a monthly basis, and it truly is the closest thing that I have to what people like to term mailbox money, like money that comes in month after month with a very long-term lease in place. It's a really great thing. The thing is, though, they require more experience and more capital. So definitely something that you're going to want to investigate a little bit further. But it's a fantastic phase 2 or phase 3 strategy once you've built a stable foundation. And then the next thing that you'll want to look into if you're looking for that cash flow is passive investments. And this can include participating in syndications, participating in real estate funds, and then getting into private lending. And we can delve so much deeper into that on a strategy call. But a syndication is basically when you have someone who is a general partner on a project and they are putting together, whether it's a multifamily business, whether it's a new development, there's all kinds of things that can be syndicated. And you can participate in that as a kind of a silent investor and get some very solid monthly returns back month after month, year over year, if it is structured correctly. Again, there's risk with all of these things, and you'll want to research highly on who to get involved with for these sorts of things. But this type of consideration is perfect for high income earners who want cash flow without operations or headaches. Passive investments can really be a game changer. This is truly that mailbox money, and for many FIRE followers, it's one of the best ways to replace W-2 income with no time commitment. I had a client, a real estate client, that sold his whole portfolio of homes, single-family homes, that had ridden the appreciation train and sold them all and put them into some of these passive investments to get rid of all of the headache, all of the landlording, and just generate those stable returns month after month. So definitely some exciting consideration. There's pros and cons. And you know what I love? I love a mix of these things to really not put all the eggs in one basket. I'm going to talk here about how cash flow is calculated. So if you're a bigger picture person like I am, just bear with us for just a minute. This is for those of you out there that need to crunch the numbers because it's important. And so many of us skip over this thing. We're going to keep it super simple though. When we're analyzing a cash flow property, we look at the rent, the property management costs, taxes, insurance, maintenance, vacancy, utilities, if there are any, and of course the mortgage. And then after that, what's left is your cash flow. And there's two metrics that are the most important. One is your monthly cash flow, and this is your real life, real-time income. And then your cash on cash return. So this tells you how effectively your investment dollars are doing. In today's market, depending on where you invest, a typical outcome might be $150 a month on a local single family, $300 to $600 a month on a smaller multifamily. And then some of these passive returns, I'm going to be kind of conservative here. Maybe they're getting 6 to 8% and they're paid monthly or quarterly. And the thing I do going back to the rents, what I like about them though, is the rents generally rise over time while the mortgage stays the same and your cash flow does tend to improve a little bit every year. So it kind of gives itself an inflation raise if the rents are going up. So here's a couple of examples of what the FIRE-friendly cash flow looks like in practice. Example one would be a long-term rental. Let's say you paid $450,000 for it, and if you put down enough money, you're cash flowing $150 to $250 a month. So that is ideal for someone who wants stability, strong tenant demand, and long-term equity gain. But as you can see, it's going to be a slow boat to China if you are going to rely on purchasing enough of these to create cash flow. So again, I love diversity. If you want to put a little into that, that is awesome. But then as another example, you might look at like a duplex in the Midwest where there's a purchase price of 250,000 and you cash flow 300 to 600 a month. That type of property could move you closer to your fire number fast. And here in Idaho, I know a lot of people that have had great success investing in other states. And they've done that specifically because they are trying to retire early. And then example 3 would be like your passive syndication. So let's say I'm an accredited investor, which means I earn a certain level of income and I have a certain number of assets in my possession, and I make a $50,000 investment. My return is 6 to 8% annually. So that's going to give me a cash flow of $250 to $350 a month. And that is without owning or managing an asset. And what I like about that is you compare that with like a savings bond or just putting it in your checking account. It's like a no-brainer when you're trying to generate cash flow. And something that I always tell my fire-oriented investors is you don't necessarily need 40 doors to retire early. You need 5 to 8 well-chosen assets that produce reliable income. We'll talk in another episode about identifying your number and what you truly need to live on too, because I think that's really powerful. Now I'm going to go over a few myths and mistakes about this idea of cash flow in real estate. First myth is that you need to invest in strictly in out-of-state properties to get cash flow. I'm going to say not necessarily. You just need the right market for your goals. You can find something that works in any market as long as you think creatively enough. I'm telling you, I've seen it happen. I'm seeing it happen here in our high Boise, Idaho market. Another myth is that cash flow should be huge from day one. In reality, cash flow grows. Year 1 might be very modest, especially as you're getting things up and running, but year 10 can be game changing. Another mistake, not really a myth, but a mistake, is underestimating management costs. Good property management is essential, especially for high income earners that do not have time to manage a property. Now, if you have time and you want to learn how to manage a few of them, I'm your girl. I can help you with that. We have self-managed for over 20 years, but not everybody wants to do that. So you want to factor in property management, and especially if you're considering medium or short-term rentals, because those costs are much, much higher percentage-wise than a long-term rental. Another mistake is not truly understanding taxes. So cash flow isn't just about the monthly payment. It's about depreciation and tax benefits that matter. And you want to take advantage of everything you can there. And you also want to understand property taxes, because in any market, property taxes can vary wildly. Another mistake is buying on emotions instead of criteria. I see this so much. Either the buyer gets emotionally caught up with the seller and doesn't want to do the wrong thing by the seller, or it's a family heirloom house that they're intent on keeping as a rental. There's a whole myriad of things where emotion can get the best of us. As an agent, I once drove a client around for months. This is when I was a new agent, mind you, and she was looking for an investment property, but her whole criteria was whether the master bathroom had 2 sinks. I'll leave it there. Didn't matter for cash flow. And the final thing that I want to touch on is asking yourself whether investing for cash flow is what's right for you. It is a very strong fit if 1, you want to retire early and you're intent on that. 2, you want security and flexibility. And 3, you want that monthly income and need it in order to retire instead of waiting for retirement accounts. It can be a perfect fit and it can be achieved. You just need to get really creative on how to go about it. Cash flow may not be a good match for you or the perfect match. And we want everything to cash flow, right? I should back up, but this is to invest strictly to generate the cash flow as your primary motivator. It may not be your perfect match if you want big appreciation plays, you don't enjoy numbers and crunching numbers and living and dying by the numbers. And it may not be a great fit if you prefer fully passive funds only, which are also valid, but just a different strategy. But for my freedom seekers, those who are drawn to the FIRE movement, those who want to build up cash flow quickly so work becomes optional, cash flow investing is one of the most effective paths to financial independence. So if you're aiming for early retirement, here's where you begin. You determine your FIRE number, which is how much monthly income you need to step into a work optional life. 2, reverse engineer your buy box. You're buying for cash flow, remember, not emotion and not for long-term equity. You're picking your market, whether that's local or out of state, and then you decide if you want to be active or passive. If you're a busy high-income earner, I think passive income, passive cash flow may be perfect. And lining up your finances and reserves. And then finally, you are going to make your first move. Your life doesn't just change when you analyze. Your life changes when you buy your first cash flowing asset, when you take action. If today's episode resonated with you, especially if you're someone who wants financial independence and the ability to retire early, then cash flow investing may be your best step. If you haven't taken the investor quiz yet, it's a great place to start. You can go to jonnaweber.com/investor quiz and find out if you truly are this freedom seeker. And if you want help building a plan, or if you're ready for your first or next cash flow property, you do have an opportunity after taking that quiz to take a little bit of your time and book a Wealth Accelerator strategy call with me. We'll map out your goals and build a clear path towards your financial freedom number. Thanks for joining me today. You are capable of financial independence, you can create cash flow, and you can retire earlier than you ever thought possible. Until next time, keep going, keep learning, go and grow, and have an amazing day. Thanks for listening to Real Estate Investing for Life. If today's episode brought you clarity or encouragement, would you please follow the show, leave a quick review, or even better, share it with a friend who's ready to start building their future. And if you're serious about creating lasting wealth and freedom, let's connect. You can find me at jonnaweber.com. I can't wait to help you take your next step toward the life you deserve. Go and grow, and we'll see you on the next episode.